Hi, my name is Maximilian Derpa. I'm managing partner at Tenity. Tenity is a global fintech and insurtech innovation platform. We have basically two businesses. The one business is that we provide corporate innovation for financial service companies like UBS, the Swiss Stock Exchange, SIX, Julius Baer. In Singapore, it's Franklin Templeton, or even the blockchain and distributed ledger ecosystem Ripple, our customers. And for them, we provide access to innovation. So we have on the corporate innovation side a three-step approach. The one is learn, the second is collaborate, and the third element is investing. So on the learning side, we cover recent trending topics like how will ChatGPT impact the financial service industry. On the collaborate part, we bring together startups and corporates throughout our incubation programs all over the globe, or as a second alternative, our corporate programs, so the dedicated corporate programs. And our third element is the investing, that we provide those corporates access to innovation where they can do direct investments or also do co-investments. And then we have the second business, which is our investment business, which I'm heading. And on the investment business side, we have several mandates and several funds we are running. The one is that we manage the CVC of the Swiss Stock Exchange called Six Fintech Ventures. It's a 50 million vehicle where we've invested since 2018 in European fintech companies. Notable companies are Yokoi, which we've invested in the seed stage, which last year raised an 80 million round from Sequoia together with Balderton and Speed Invest. Or also Keyrock, which is a liquidity market maker, which has raised a 73 million euro round from Ripple. And beside managing and advising the CVC of the Swiss Stock Exchange, we also have now done a first closing of our early stage incubation fund, which is called the Tenity Incubation Fund. And it's backed by large corporates as well, like UBS, SIX, Julius Baer, and Generali, but also by us with a significant investment. And with this vehicle, we invest in companies emerging out of our global incubation programs. So this is kind of what the element that combines both sides, so the corporate innovation side and the investment side, is that we globally run incubation programs. It's a bit like what Y Combinator does, or for instance also Techstars. We differentiate by only doing it in fintech and insurtech, basically. So this is what we do. And then through the programs, we go out globally. We hunt startups. We motivate them to apply for the programs. Then we select them. We bring them in for speed dating. We get to know the team, and then once we select startups, they will join our one of our global incubation programs. And incubation programs runs over 4 months. We do it globally in 3 hubs. So one is in Switzerland, in Zurich, where we cover the Western European region. So we source companies from the UK, over France, Benelux, Italy, Spain, and also Switzerland, Germany to our program in Zurich. And then we have one in Singapore where we cover the APAC region. So we get a lot of deal flow from India, from Singapore, even from Indonesia, South Korea. And then we have another program running covering the Nordics and Eastern Europe, which is based in Tallinn in Estonia. And there we run our 4 months of incubation program. As others also say, it's team basically. So where we are is in the pre-seed stage, so we're super early. We work with founders who haven't even founded or incorporated the company. This is kind of the stage we are at, or founders who have just incorporated their company. So at this stage, it's mainly the team we are investing in, because we say to ourselves, although we are specialized in fintech and insurtech, and we really understand the industry, and we really have all the network to those large corporates where we always can talk to about kind of future trends and how they see the industry, we always say, you are the expert in what you do. This is what we always believe in the companies. And then we look at the teams, have they the ability to execute on it, basically. And once they are in the program, we use the 4 months of incubation program as an extended due diligence phase, basically. So we work together with the founders. They are in our offices. We can observe them. How do they progress? Do they have the drive, the ability to really thrive and make a difference in the world? And if so, then we connect them to our broader ecosystem of corporates and investors. And once they receive an external term sheet from an investor, we kind of double down on the case and invest a substantial investment into the company. So our investment approach is actually several stages. The first stage is that any company that gets sourced into one of our global incubation programs gets an initial ticket of 50K in return to 2.5% stake we get in the company. So this is a very small investment, but for a company that is at pre-seed, it's quite significant for them. It gives them a bit of runway, right? And I think it's also not too expensive. It's only 2.5%, and we invested via CLA. And then our approach is to do the extended due diligence during the program, connect them to the external investors, and once they get the external additional external validation from an external lead investor who will lead around and bring the company on the next level, then it's our time to double down on such a winner and invest up to 250,000 in such companies to arrive at roughly 10% stake. So we want to be a relevant investor, but we don't want to be kind of a leading investor or a blocking investor. And why is this the case? Why are we not leading any investments? It's basically because our approach is that we build a huge portfolio of roughly 200 to 300 companies globally over the next 4 to 5 years with our fund. So we say our approach is that we say in an early stage, it doesn't make a lot of sense to have a small portfolio of, let's say, 20 to 30 companies, but we say we go very broad, but also very selective in our approach, basically. And what we provide is to our LPs in the fund, two things. To our corporate LPs, we provide access to innovation because we get them lead time, we get them all the inside information, and we get them access to making actually deals. And for our financial LPs, which are family offices, high net worth individuals, or fund of funds, basically, we say we provide the financial return by really being heavily selective and heavily doubling down on the winners. There are multiple of factors. I mean, one is a business model, one is the regulatory burden, because we are in financial service, it's always also very close to regulation. But the main factor is the mindset of the founders. So if we have founders which think global from early on, from the very beginning, and say, hey, we want to scale beyond, I think this is the most important factor, because they already built and set up even the early stage company to be scalable and to kind of go abroad very early, actually, especially as we emerge from Switzerland, right? And the Swiss market is very small with only 8 million, with an 8 million population. So we motivate all of our companies coming through our Swiss program to go abroad very early on. And this is also where we can provide value with our local hubs and ecosystems we're having, especially for instance, the use case or the case study is that companies from the wealth industry joining our programs. I mean, in Singapore, the wealth industry is also very strong. So companies joining our Swiss program, we already brought them to our Singaporean program as well. So we support them in the Singaporean market entry. Yes, so we have Apex, which was, I think, a couple of years ago in a Swiss program. It's a Swiss-based company. And then they joined later on a Singaporean program, actually. Then we had a lot of companies within our programs where the SIX CVC has invested. Among others, it's Yokoi, it's Keyrock, it's Relio, for instance. These are the companies where we kind of foster collaboration between our startups and also our corporates to create value, tangible value for our sides. We have built an ecosystem, basically, and the ecosystem always consists of 4 players. The player 1 are our startups, which join our programs. So startups always have the chance to exchange among peers, basically. The second element of our ecosystem are our corporates, where they have the chance to exchange with kind of the industry and potential clients. The third element are our investors, so investors that are business angels, early stage fintech investors, where they can get the funding. And the fourth element, and this is what you're referring to with your question, are the mentors. So we have globally a network of 200 mentors which come from the industry, basically. And with every company that joins one of our program, they get access or they get an allocation to one of our mentors. So to have a one-on-one buddy they can actually talk to and work with during the program. And how we select them is basically we have interviews with those guys, right? We know them for quite a long time now, and we know which company or which mentor creates most of the value, and then we connect them accordingly to the company. And then you have always kind of have the distribution curve, and then you have all the other mentors that are also part of the ecosystem that come by time. And this kind of creates value more on an opportunistic way for the startup. The vision for Tenity is to grow international and grow global, basically. We did a financing round by ourselves last year and a spin-off and management buyout. And since then, we grow kind of globally by, for instance, opening a new office in Tallinn. We've just hired one new person for the Israel for the MENA region, and we always venture out to new regions to run additional programs for our corporate partners and also source companies in our corporates. And we do this across Europe. We do this across the Asian region. For instance, South Korea could be a new market for us. So we are very open to grow and even grow unorganically. This is also something we are looking at to increase our ecosystem, to increase our reach, and to increase the value we can provide for startups and corporates. What I think about is it's family. I mean, it's not really family per se, but it's more closer and smaller and than other conferences, for instance, in Berlin or London I've attended. And this is what I very much like, that it's more personal.